Okay, life gonna come at you fast. But you know what? You gotta stay ready.
Strong enough, never gave up every time I gave my all. Refuse to fall. Strong enough.
Can't stop, won't stop, keep going, don't stop.
Thanks for tuning in to another episode of Real Estate Mastery with the Dealmaker, Jessica Myers, where we break down complex real estate strategies so that you can master them with ease. Today, we got joining us Jack Thomas of none other than Jetway Financial. Thanks for joining us today, Jack. How you doing?
I am doing well, Jessica. Thanks for having me. Hi, people watching at home.
One of the main things that we like to do here on the show is to really create an atmosphere where people can tune in, they can learn about a lot of these strategies that they may hear about, because one of the things that people know the power of real estate. They know that they should be involved in real estate in some capacity, but they are not sure which strategy is best to employ. And that's one of the things that we're talking about. How have you used real estate as the product, and what strategies within real estate have you employed to have success?
Oh, wow. Great question, Jessica. I started so long ago in real estate. I pretty much have done everything in real estate with the exception of being an actual real estate developer.
So when you say everything, that includes like what?
Yeah, so I started off wholesaling, fixing flip. In fact, my first deal compromised so many of the same of multiple strategies. It was we thought we were going to fix and flip, so we purchased the property through a wholesale from a distressed sale, and from that distressed sale purchase, I wrote the lady a $5,000 check, and so she I'll tell you about that later because she actually never cashed a check. Right?
Oh wow.
So I wrote her the check. We took possession of the property immediately, and it was a 6-unit, beautiful gray stone building on the west side of Chicago.
So technically you got it for free because if she never...
Technically we got it for free.
Okay, so you got into your first real estate deal.
Right. So we walked in, and it was just a shell, right? So, which was how we liked it at the time, because we thought that we were going to go ahead add value to it, and we were going to go ahead resell it after we rehabbed it. What happened was, for our first deal, I had a partner at the time. For that first deal, it was a little more complex than it was too much for us, right? It was 6 units. It was more than what we could handle. So a few months after being in the deal, what we ended up doing was we were going to sell it to what we thought was an end buyer, who actually turned out to be a wholesaler. And so at the closing table, we had a hard money lender. The same hard money lender that was going to actually fund our deal was funding the entire thread of deals that were attached. So when we showed up to the closing, first of all, the lady brought the check, and she said I couldn't cash it because she had the wrong last name on it. And so I had to give her a good check.
So it wasn't free. So you had to go back and pay.
Yeah, but the deal paid for it all. And that's the thing, you know, if you get a good deal and there's equity and the deal or equity on the after repair value, that covers everything that goes along the way. So that's what it is that I learned on that first transaction. So the buyer that we had, he was wholesaling it to an end buyer, so everyone added their fees on top of it, and it was all being funded by that same hard money lender that we initially brought to the table. So for my partner and I, we became great friends with that hard money lender. We built a strong relationship with him.
Because you just helped him to eat 3 times off of the same deal, correct?
Absolutely.
So he ate 3 times off of one deal. But that's why, I guess, you know, we look at real estate and the asset, but what you're more so talking about is more of the capital structure.
That's exactly right. So I was giving you that story to actually lead into that. So what I learned from that first transaction was something bigger than what we think that real estate is, right? So now that I'm on the private banking side, what I realize is real estate is just the collateral for the true asset. The true asset is the note. So so now on this side, you know, I put money to work and I actually acquire notes or originate notes, and we secure that capital by the actual real estate. So
Now, what is a note defined as?
A note is simply an IOU, right? So these green pieces of paper that we carry in our pocket,
Call it cash.
Right,
Some
let's
people call it cash,
right?
you know, some people call it other things, but they're really IOU notes.
It's really an IOU. It tells you directly on there it's a Fed Reserve note. A note is just an IOU. It becomes legal tender by the Fed Reserve Act of 1913, and that's why we use it to pay all debts, goods for public and private.
So you dropped a lot of gems, and I want you guys to make sure that you guys grasp the concepts of what's being said and what's being, you know, the principles and how they're being parlayed and played in actuality in real life. So,
yeah. So from that, right? Money is, well, let's talk about how wealth is made now, because that's where we're going, right? So for me, I learned from a variety of things, but what it comes down to is the core of a concept. So once I understand the core of the concept, I realize that everything else is just an application of that initial core. So when we're talking about wealth, because that's what we're talking about mastery, right? Mastery and wealth. So we're going to talk about wealth. Let's talk about how wealth is built, right? So wealth is built from 4 different areas, and this is the core concept of it. And we'll talk about the application of those 4 areas. But the core of it is, the first thing is it's leverage, right? So we're going to leverage a bank to acquire real estate, right? So that's the first thing, it's leverage.
leverage.
The second thing is resource circulation, right? So that bank is putting money into that neighborhood, into that community, for that borrower or that real estate investor to acquire the property. That real estate investor turns around and goes to Home Depot or wherever to buy products to go ahead and put into that property to improve it.
So sending money through the funnel.
Exactly.
So sending money, activating the money.
Right. And that's that circulation,
the velocity
right?
of money.
The velocity of money, right? We talk about that often. So we have, initially, again, we got leverage,
Leverage,
resource circulation, and then you're going to duplicate that, because you're going to do that over and over again, because that's
Duplication.
going to be your cash flow system,
Okay.
right? And when you really get good, automation. Automation is the 4th component, which puts everything on autopilot, and that's where the true wealth is being built from.
So some of the asset classes that we've been able to partner with and do together, do you want to speak about those and maybe, you know, how the capital infrastructure that you just mentioned aids to the success of those programs?
Yes, good point. It all comes down to strategy and structure, right? So for us, we're partnered on a few different strategies, right? And we have a couple of different companies that we have, and we have good strategies to make sure that we're able to do it. For example, with the hotels that we purchased, we used a syndication structure, whereas we had general partners, and then we had limited partners, which were the passive investors, and they bring money to the strategy to make it work. And then once that money is in play, we turn around and we purchase the asset. From that, we add whatever additional value that we need for that asset. So for example, for the hotels, one of the hotels needed a property improvement program. So we improved the property. We added value to it by updating the rooms. We increased the daily rate on those hotel rooms. And now it creates passive income for us and for the companies.
So how do I apply the 4 steps of wealth building to, you know, that scenario?
Good question. So
leverage. If we
it's
start with leverage,
right? So the initial leverage is building a relationship with capital, right? With a lender, with your bank, with a private lender, with a real estate hard money lender, right? So you acquire a loan. You have a good relationship with a real estate agent, right?
Okay.
So they're finding you deals. You find a deal that you like, it's undervalued. You buy a deal that's undervalued. That's where you're going to really make your money at, right? If you find something that's undervalued, you add value to it, you already have equity and that transaction going in, right?
Because that's how your wholesaler was able to be a part of the equation of the first time. They were able to get keen on identifying undervalued asset. Because I feel like that's the win more than anything. Like you said, how you start is really the showcase of how it's going to go.
Part-time job, full-time hustle, all-time Shiro to all of us. You nurture, we listen. You teach, we thrive. You lift our spirits, but we've got to lay down the truth. It's time for you, our Shiro, to stretch for the stars. A free online chat can give you the personalized tips you need to start boosting your retirement savings today. Start saving more for retirement so you can feel prepared and live your life to the fullest. Visit aceyourretirement.org.
Every day,
Millions of people
are connecting.
Father,
cosplayer,
Mentor.
actor. It's time we take a step forward, come together,
and discover
how accepting our differences
can make us stronger.
It's funny, you know, so like I was telling some colleagues, you know, when you buy low, you cash flow, right?
Yeah,
And that's
buy low,
buy
cash
low,
flow.
you cash flow, right? That's
Buy
the
low,
secret.
you cash flow.
So like, and the reality of it is simply this. Money is made on the purchase, it's just collected later. So if you go into something and it's undervalued, that's when you have a good deal, you add a little more value to it, and then that's when you go ahead and receive the profit stream that comes from there.
So is that the leverage piece?
That is the leverage. That's also a leverage within your leverage, right? So great insight. So another thing is, even though those 4 principles work, you can apply those 4 principles even within your strategy to give you additional cash. So
Nice.
yeah.
I like where you're going. Okay, so we got leverage, and
Yeah,
then
leverage.
how does the next one then apply?
Resource circulation, right? So you want to buy smart, right? So when you think about the Walmarts of the world or the Amazons of the world, right? What it is that they do so now we're going to go into something a little bit different. So what it is that they do is they realize that in order for them to make more money, they either have to buy at a deeper discount or raise their price a little bit higher, right? So in real estate, the same thing applies. You know, when you get a distressed sale, that's when you go ahead and you're buying at a lower point, right? If you're buying a note from a bank or from a hedge fund or something, you're actually getting it at the lowest point. So when you add value or you just sell, now you can go ahead and sell at market value and you could get some profit. But if you added value to it, you could sell at the after repair value and get even more profit, right? So so that's the leverage and the application of how you apply that resources to make it circulate. And you're also circulating more income because you're bringing in more passive income. So that's the additional leverage within that same strategy.
Ow. I feel like I'm watching MJ and the Bulls in like 1998. Like you're seeing real strategies being applied, real financial principles being applied to real estate and how you can use it, you know, to increase your portfolio. So the next thing I would say, so we got the leverage,
Right.
we got the resource circulation.
That's right.
How do I get the automation within that same?
Let's not skip past duplication.
Duplication.
You can't get the automation
Duplication.
without duplication, right? So the thing is, you don't really want to just do it one time, right? If you do it one time, you're still living paycheck to paycheck, right? You got
Even as an entrepreneur, even as an investor,
Absolutely.
even as a flipper,
That's
you can
right.
still be living paycheck to paycheck if you don't have the key element of duplication.
You have to have duplication. Because if you do one deal, you're still broke, right? So by building other relationships, and those relationships are also a leverage, right? You're leveraging their know-how, you're leveraging their expertise, you're leveraging their resources that they bring to the table.
Yeah. I mean, that's actually how we started partnering together, leveraging each other's resources.
Absolutely.
You have a particular set of skills, and I have a particular set of
You
skills.
certainly do.
And together we were able to come together and do a lot of big commercial deals.
Yes.
And I mean, that's been fantastic. What were you about to say?
Let's not skip too far past the duplication.
Okay.
Because it's the practice of doing these things over and over again that brings new deals, new opportunities, new structures, or duplicating those same structures, and then you go ahead and that's when you get the passive income. Well, not necessarily all the way passive because you're still being active to create the income, right? So it's only passive income if it's rental property, right? But if you're doing fix and flip, that's active income because you're physically doing an activity to go ahead and get income, right?
Yeah.
So the automation is when it works on its own, right? So the strategy would be at that point, buy and hold, right? So the hotels, for example, is an automated process, right? It works on autopilot. We have other mechanisms that are working on our behalf so that we don't have to physically be there to do it.
Yeah.
So, and that's the hospitality management staff that we have that runs all three of the hotels. So,
Yeah. I mean, so how long did it take you to master all 4 principles? Like for people that are starting at, okay, principle number 1, how long did it take you to master all 4 of them and for them to work for you?
For me, it was like I'm a fast study on some educational principles, right? So I from the background that I had, it put me in a good opportunity to be able to form relationships and form relationships fast, right? So I leverage a lot of relationships. I build relationships. So it was quicker for me to acquire more assets. But to get to the point to where you were fully automated, that took a little bit of work, right? So it took a little bit of finesse. It took a little bit of going to different classes, like real estate mastery, right? So I encourage anyone that's watching, participate, follow Jessica, follow some of the different places that she educates on, because even as we further educate, we further learn and we build new relationships that help get us further along our way, and we apply those leverages, we apply those resource circulations, we apply the practice of duplication, and that's what gets us to the automation point. So and it's not a quick answer because it's a journey, right? So, but I'm sure that you could attest to it, right? From building relationships, right? That you ended up getting to the automated point at a quicker pace, right?
Yeah, and it's a thing I like to call networking. It's like your net worth is equal to your network. And I've heard that for so long and thought it to be cliche until I understood that, wait, I feel rich. Why do I feel rich? Because my network is rich. Not about the money in the account or the assets I have access to, but the people that I can put in place to handle and take down complex issues and complex things. And that's a way, too, to expedite your way of getting to your goals and your success.
I got a question for you. Like, what was your biggest challenge on your journey?
Oh, gosh. I think the biggest challenge on my journey is understanding that it was a journey. And not feeling like I got to get to the destination, got to get to the next step, got to get to, because obviously when I went to quit my job, it was like, I got to get to, making $100,000 or getting $1 million.
That's $10,000 a month, right?
Exactly.
It's funny. That's always the number.
Exactly.
It's a real stat. That's always the number.
10,000. I just need, if I can get to $10,000 a month, I can quit my job and I'll be okay.
Right.
And then when you get that and you get there and you're just like, but I need so much more because now I got more assets. So now with the number of assets that I got, I need more than $10,000 to operate. Because even now, looking at our portfolio, through our portfolio, we pay probably over $50,000 a month in mortgages.
Oh, easily, yeah.
And different properties in various places. And it's just like, wow, that $10,000 is nothing. So it's not about the goal. It's about understanding that it's the process. It's the same principles that help me to generate 10,000. When you duplicate it, and then you're able to put it on automation, you're able to now increase what you're able to get. So focus on the journey, the processes, and the things that get you there, the vehicles that get you there, versus got to make $1 million. And I think that's where, when so many people get inside of real estate, they're just like, I want to make money, I want to make money. Cool. Now you got all these assets, the money you thought you wanted. And let's not talk about inflation. So then we're going to talk about your spending power and your buying power. So the money you thought you needed today, when you talk about inflation and other things like that, it's not the same buying power that when you finally get it that you'll need.
Don't forget tax.
And then taxation.
And that's tax, right.
So if you're not educating yourself on different tax principles that need to be in place with each of your strategies, then you can be out here losing. Because one of the things that I had to get clear on, and you actually helped me about product and strategy. The product is real estate.
Right.
But then there are so many strategies within real estate.
Oh, yeah, several.
But I think so many people get hung up on the product. Like, that's like, I gotta get something to eat, Now, chips is food. But chips won't sustain you in the long run.
Right.
And that's the thing. It's like you have to understand, you know, that's where you had the food pyramid to show you how to put together a meal, to make sure you're getting a nutritional balance meal. Now, whether it's nutritional balance is a whole nother conversation.
The irony is, since we were bringing up nutrition, you know that was funded by Department of Dairy and Department of Meat, right? So that was nothing other than marketing, right? Which is a whole nother type of leverage, you know, for a business strategy to create wealth. You see the core of the concept, different application of it. So everyone understands the core of wealth building. They just apply it to whatever vehicle or product it is that creates their passive income stream.
So really, we're talking about real estate mastery and how this applies to real estate.
We're talking about wealth.
But it can apply to other things.
We're just applying it to real estate in this conversation, but it applies to a variety of different things.
Because a lot of people that are watching that want to get inside real estate, it's just like you're saying, these are basic wealth principles that can be applied to anything.
So if you understand the core, then you could go ahead and apply it to wherever you want to apply it.
Gotcha.
Whatever widget it is that you want to create.
Now do y'all see why I feel so rich? When you got friends like this, or you got partners like this, you're networking. You're having elevated conversations that get you to see things differently. Because to me, I look at it like we're players on the field. Like, do we know how Super Bowl is going to go when they're back there strategizing? No, but you know the players on the team, and you know certain plays that will help you win. And you go out there and you do that to the best of your ability.
Okay, I keep on saying self-reflection, but it's true. This is what I really think.
How do you recognize what you can do based off of what you want to do?
Come on, being honest with yourself. How can I fit this into my schedule? I think it's really being honest with yourself. And if you're in a hierarchy kind of organization, being honest with the people that manage you and are over you.
Welcome back to another episode of Single in.
When we do think about building relationships, even professionally, it comes from consistent delivery on promises and effort.
It is kind of like an insert, almost like a peekaboo, like, what would my life be like with this person?
Yeah.
You know, like.
That's a good way to look at it.
Yeah, you know, like.
Besides sex and in the sight of God and taking vows in front of all those that you love, what's the point of getting married?
Have a great night. This is Single in the City. We'll see you next week.
You're my lucky strike.
Honey, what I think you need is a socket wrench.
I played JV basketball.
I'm sorry. I don't think it looks right.
This is good, and it's all good, baby.
Is it really all good?
If you love me enough to routinely test your handyman skills, not to mention the strength of your marriage, then of course you'll visit nhtsa.gov/therightseat to make sure I'm in the right car seat.
I'm gonna call my dad.
I look at, I'm risk averse. You know, when I first got into real estate, you know, we just had a whole lot of hope, right? It was hopeism, right? You know,
well, I mean, you paid, you gave somebody a check and they couldn't even cash it. So,
right. We were all hoping. She was hoping that she was going to get paid. We were hoping that we were going to make some money from it, right? So, like, from that hope, though, you actually have to do something, right? You have to do something with that. You have to actually learn some things along the way. So as you're learning along the way, you're building those relationships. You get a better understanding of how money truly works. So once you understand how money truly works, the core of the concept, the core of finance, the core of wealth, then you could go ahead and do something more powerful than what you initially thought that you were going to do, right? So like when you started real estate, I'm pretty sure you thought that you were probably just a fixer-flipper, right? Right.
Well, I
right?
actually got my start as a wholesaler.
Oh, even lower, right?
Exactly, because you know when you're a wholesaler and you send out those messages to the investors and you're like, hey, you can make $60,000 from this property.
Right.
And like you said, when you start seeing the same players and lenders at the table, you're like, that's the same lender I was talking to.
Yeah.
Wait, if he talked to the same guy I was talking to, how am I giving him all these deals that he can make 40, 50, 60,000 and I'm barely walking away with 2,000?
I mean, he's getting a percentage off of everything.
Exactly.
Right? He's controlling the whole table. So
that let me know I'm in the wrong place, the wrong seat.
Think about this. Monopoly, right? You played Monopoly as a kid?
Oh, yeah.
Yeah? Who always won?
The bank?
Every single time. Every single time. The only time that banks actually lose is when they're over-leveraged, when they get greedy, and they start shifting their lending criteria.
Oh, shifting the lending criteria.
Right. So
You're
think
dropping
about
bars.
so think about the market that we're in right now.
Okay.
Right? So the Fed raised inflation, right? So you're seeing now the cost of money is going up.
Yes.
So you'll start seeing, so what that means is, and even within this first quarter of this last year, banks started lending less because the cost of money was more, right? So because the cost of money is more, people don't want to buy as much of it, right? So because it's more expensive. So now what the bank does is they change their lending criteria to make it a little more enticing to bring you back to the table to purchase some more of their money. Right?
Gotcha.
And so now that you're purchasing their money at a higher cost, but now from someone that may not have been able to get a deal beforehand, maybe credit might have been a little bit questionable, had a couple of blemishes. Now, oh, don't worry about it. We have these bank statement loans.
No-doc loans.
No-doc loans.
But aren't the no-doc loans the thing that sent us in the crisis before? The no-doc loans?
Yo, yes and no. So,
Yo, I'm gonna use that.
Yeah. So it was part of it, right? But it was a bunch of other layers. It was a bunch of other things that contributed to it. You didn't have actual real borrowers that could paper up, so they didn't have real capital to sustain the loans of which that were happening. So then when the market shifted, real estate value decreased. And then it creates the panic that you'll see in the media. And so all of those things, all of those other X factors took place. This economy is a little bit different. We are hyperinflated, but it's not just in real estate, it's everywhere, right? So it's in all pretty much goods and services. So I don't think that we'll be as bad as that. You
the
know,
economic
if we're getting
conditions
there, right?
aren't there to be as severe as before.
But I believe that it's still going to be a problem, you know, in the market. So if you're following Warren Buffett's thought process, if you want to be on the opposite end of whatever the hype or the sensation is in the market. So if everyone is eager to buy, you need to be selling. If everyone is eager to sell, you need to be buying. So you buy at the distress, you sell at the height of the market. So for those that had already bought low, now is the time for you guys to be selling because people are buying and they're spending above asking price of property, right?
So how do you know in your portfolio when building what to hold on to and then what to sell to take advantage of the peaks and the valleys?
I would say you would look at what has the highest and best use or the highest value as well, right? So if it's and also definitely depending upon what kind of market or what kind of community that is in. So if that community is, so for example, right, I'll give you a real life example of my scenario. So I still own a small portfolio of single family homes in Chicago. So now for me, it's time to go ahead and sell those properties because they increased in value, but the reality of it is if I continue to hold them, and the break-even point for me to get, in order for me to break even with the sales, with the value, with the equity from the sales price, it would take me another 12 or 13 years to get that, right? So I would rather have cash now, so so when the market shifts, I could go ahead and reload, whether it's in real estate or whether it's in a true asset, which is the note, right? So now I would buy note as opposed to real estate, but that's just a pathology or a trajectory towards where you are in your investment career because we're talking about wealth. not just real estate.
Yeah, it gives you the leverage that you need
Absolutely.
to then start the resource circulation, which then allows you to duplicate it.
Absolutely.
Until it's ultimately automated.
Yep.
I love it. I love how it all comes full circle. Now, if I'm getting started tomorrow, not knowing any of this stuff,
Okay.
what would you suggest I start?
I would start at the core, right? So we're talking about, we all know that now at this point, we all know, you all know, wealth is built on 4 principles, right? Leverage, resource circulation, duplication, automation. So I would start at the beginning, right? Because we already reverse engineered the core strategy that's going to get you wealth, right? So I would start at the leverage. So the leverage would be building a strong team, right? Because you're gonna leverage the relationships that you have within your team to get you closer to your real goal, right? So from real estate, I learned that you need 5 core components, right? You need a good financial partner, right? So that's either your private money, your hard money, or your bank, right? You need a good attorney. Your attorney is going to come with his team and his resources. He's going to come with the title company, and he's going to come with some other things that you need for your toolbox, right? You're going to need good contractors because they're actually physically going to go ahead and do the work and keep your property up and running. You're going to need a good real estate agent, because that's what's going to go ahead and find you the deals and sell you the deals, and that real estate umbrella could also incorporate wholesalers, right? You need deal flow, right? And what else was it?
So you got the real estate agent, that's the opportunity, the attorney.
Real estate attorney.
And then I have
the financial partner, the financial
the capital
lender,
partner.
right? I forgot the 5th off the top
Okay,
of my
so
head.
we
I can't remember off the top, right?
We got 4. We got 4 principles.
But remember it's 5.
Yeah.
Remember it's 5,
Yeah.
right?
Okay.
Yeah, okay. So, title company. Yeah,
Well, that comes with the attorney.
But you still need to form your own relationship with the title company.
Okay. Okay.
You want them to move quick. You want them to know you. It's good that they know your attorney, but they need to have a relationship with you as well.
Because I know a lot of title companies I reached out to, they always say that they'd rather deal with the attorney.
Sure.
But like you said, maybe you just got to get over that hump and I'm going to talk to you anyway.
Listen,
I don't care what you said.
We're forming relationships.
Yeah.
Right?
Because networking.
Yeah, exactly.
Networking, yeah.
The stronger that your relationships are within the resources within your relationship, the stronger of an investor that you become.
Yeah.
So now they end up sharing information that you may not have known, and then it gets you to closer to your goal at a faster pace.
So speaking of, how can people stay tapped in? I'm all about surrounding yourself to have these elevated conversations. How can people tap into, what you created and to be around the conversations and everything like that?
Jessica, it's conversations like these, right? So like mastery, right? So we have a Facebook group, right?
A private Facebook group.
Right, so what's the name of the...
Wealth Builders, the Jetway.
Wealth Builders, the Jetway. So at Wealth Builders, the Jetway.
Private Facebook group that you can have access to. Wealth Builders, the Jetway. It keeps you tapped into conversations like this, right?
It keeps you tapped in. And what other things are all coming to there? We're having this conversation, this show that'll be...
Yeah. So like these conversations, book suggestions, because I was actually going to ask, what books, people should be reading as well.
Ton of books.
Yeah. So really just staying tapped into opportunities that come. A lot of those resources from building your team, where people may like, how do I get an attorney or how do I get that? So, allowing you to build your team.
Accountants, you definitely need a good accounting team.
Yes. Yeah. Okay. Yeah. So the players on the team, and those are the elements that are all coagulated through the Wealth Builders, the Jetway.
But also, not just there, but we're bringing education from different components of different relationships that we have.
Yeah.
So it'll be from fireside chats. It'll be some information from some of your other classes that you teach as well, right?
Yes. It's about mastery of wealth building overall and leveraging real estate and other assets or other, asset factories that help to generate money and keep your money flowing.
Absolutely. You got to have different asset classes if you're going to have a balanced portfolio, right? So, yeah.
Well, thank you for joining us today. How can people find you if they want to get more information?
Well, I'm shy with social media. So but on Instagram, I'm follow_JT.
Okay,
Yeah, and then you can find us on
Oh, well, Facebook, the private group on Facebook, yes.
Right, and that's, yeah, you could shoot an email to jack@jetwayfinancial.com, and that's the best way to go ahead and reach me.
All right. Thank you so much for continuing the ethos of having these high-level, intriguing conversations that allow people to take a deeper dive into complex real estate strategies and simplify it and master it in the easiest way possible. It's your girl, Jessica Myers, the Deal Maker. Thanks for tuning in.
Bye now.
Still standing tall. Strong enough.
You gotta push through. You gotta keep believing in yourself because you know you got it. So let's get it. Let's go.